everyone. Welcome to the KE Report, a company update coming from CVW Clean Tech. I am chatting again with the CEO, Akshay Dubey. CVW Clean Tech is traded on the TSX Venture Exchange under the symbol CVW and on the OTCQX under the symbol CVWFF. Now, I've had Akshay on the show a number of times before talking about the company's really technology, that they're reprocessing of froth treatment tailings from oil sands mining operations to recover additional hydrocarbons and critical minerals. This technology really focused on the major oil sands producers. And I've been talking with Akshay about how the company is progressing to get this technology, this process in the field. Recently, though, the company has taken a bit of a shift in strategy to become more of a diversified royalty portfolio. The company back in August made an investment in a clean tech company, North Star Clean Technologies, to get a royalty on their technology. The deal, valued at about $14 million through a convertible note, is really the first step in the company diversifying out of simply just the oil sands technology that the company has. So Akshay, let's focus on this strategy, I guess, shift in a way to become more of a diversified company. How did this deal come together? Take us through the importance for investors now that you have this investment in North Star Clean Technologies.
Well, first of all, thanks for having me on the show again and appreciate your listeners tuning in. From our perspective, I'd say as a management team and board, we've always recognized that the world is going to need innovation and clean technologies to be able to help put us on a path of sustainability. This is especially true in the commodity sectors, whether you look at the oil sands or the broader oil and gas sector, or you look at metals or mining, or you look at agriculture. The reality is the world needs more commodities. We have things like population growth, increasing quality of life for people across the world, all of which is going to require us to be able to deliver these commodities to allow those folks to be able to have that increased quality of life. And so to be able to deliver these commodities in a way that's sustainable is critical for the planet. So our focus as a team was always on how do we deploy technology within the oil sand space to be able to deliver that change, to deliver the hydrocarbons that are being lost in their process, to be able to deliver the minerals that are being lost in their process, and do it in a way that cleans up the tailings and reduces the environmental emissions. But what we realize is that there's going to have to be a variety of technologies that are put in place across the entire commodity space that allows these industries to become more sustainable. And we saw a huge opportunity here to become the first clean technology royalty company. What that means essentially is that we have our own creating value from waste technology for the oil sand space, a technology that's been proven and has been ready to be deployed. But the reality is we're unlikely to ever be the operators of that technology, as we're looking to partner with the operators on site, be the technology provider, and really leave with a passive cash flow type of interest in the technology, which is very similar to a royalty. So the next logical thought was, can we then go out and deploy a similar royalty structure to finance other companies that are doing interesting things in the space, provide them the capital to be able to accelerate the growth of their business, and in return, keep a financial interest through a royalty in their technology or their assets to, one, create that ecosystem of clean technology innovation and commercialization that the world needs, but two, to create a diversified value stream or cash flow stream for our own shareholders to be able to benefit from that growth of the clean technology space within the commodity sectors. And that's precisely what we did with our first royalty diversification transaction, which we announced in August of this year, where we provided North Star Clean Technologies, a company that's building a shingle recycling facility here in Calgary with their own patented technology, the capital to be able to accelerate their growth, and in return, keep a royalty on their next two facilities, which will be built out over the next few years. So it's a very exciting time for CVW. We see an opportunity to be the first royalty company in the space and really to partner with very smart innovators to deploy the technologies that these industries need.
So Akshay, give us a little bit more insights on this North Star Clean Technology then. They're building their first facility. The way I understand it is the capital that you gave them speeds up development on two more facilities. How does that all tie into time-wise when CVW could start receiving some sort of revenue from this transaction?
So North Star Clean Technologies is building their first facility, as I said, in Calgary today. That facility was fully financed last year. A lot of the capital came obviously from their shareholders, but also from the Business Development Bank of Canada and Emissions Reduction Alberta. It's a technology that we've been keeping an eye on. We've had the opportunity to spend quite a bit of time with their CEO, Aidan Mills, over the last year, and realized that as this company looks to grow, there might be an opportunity for us to provide them additional capital beyond that first facility to help them accelerate their growth. As Calgary enters commissioning early next year, it'll be producing cash flow by the second half of the year. Normally, a company may have to wait another 3 to 6 months, build a track record of delivering against that first facility's cash flow and production before they then go out and raise more capital. And then they go and find a site, secure that land, order long lead time items, complete the engineering. So there is some time lag that would take place between their first and second and third facilities. What we thought would be an opportune time to partner with them and something that they were very interested in is if we were able to provide them capital to really accelerate that timeline and accelerate their growth. So by providing them the $14 million today, it allows North Star to be in a position so that once their Calgary facility is up and running and they're comfortable that it's hitting the operational metrics it should, they can very quickly move to a final investment decision on their next two facilities and accelerate the development of those facilities. So we provided them that capital at the corporate level. We did it through a convertible note that's secured against their assets and intellectual property. And as their next facility is up and running, it will convert into a royalty on that facility. So $7 million converts into a 12% royalty on facility 2, and $7 million converts into a 12% royalty on facility 3. On our base case assumptions, we expect that their first facility, or actually their second facility, but the first that we have a royalty on, will enter production in 2027. And then the following year in 2028, both facilities would be fully up and running. Of course, if you ask North Star's management team, they're hoping to get those facilities running sooner, which we would be thrilled to see as a royalty owner. What we are also able to do is we have a 10% coupon on this convertible payment, which is $1.4 million a year. North Star has the option to capitalize that payment, or they can make that interest payment here and over the next few years as they build those facilities out. So it remains to be seen from their perspective, which is the better option for them from an investment perspective. But we're excited because now our shareholders, for the first time in the history of the company, have direct line of sight to revenue and cash flow that provides us the ability to be in a position where there's no more equity dilution required from an ongoing financing perspective for the business itself.
So Akshay, what type of royalty is this? How does CVW get paid when this facility is up and running? And are there any forecasts that we can put around what sort of profitability these facilities could have?
So in terms of the amount that's expected to come in, the convertible interest payment would be $1.4 million here in the interim period until they're up and running, which again, I said could be capitalized. In terms of a financial forecast, and you can see this in the corporate presentation that we've put out, we expect to be receiving $1.8 million a year in steady state cash flow going forward from these facilities. In terms of how this royalty is delivered or paid to CVW, essentially, North Star receives a few different revenue streams. One, they receive a tipping fee, which is similar to a waste disposal fee that a landfill would charge if you went and delivered waste to them. So North Star charges the folks that drop off the shingles. That tipping fee makes up about 35% of their total revenue. The largest source of the revenue is actually once they take in those shingles and reprocess them, they produce liquid asphalt, which is a product that is directly linked to oil prices. That makes up about 60% of their total revenue. The remaining few percent is basically aggregate and fiber, which are low value products that they're also able to recover from their process. So our royalty payments, when you think about the 1.8 million, would be on that basis, 60% oil exposure through liquid asphalt, 35% exposure to tipping fees, and the remaining from aggregate and fiber. As each year they produce the revenue on a quarterly basis, we will be receiving those royalty payments to the company on the basis of the volumes and the prices of the products that they're able to produce. We do see significant upside to the $1.8 million that we've put out as our base case, specifically around the fact that North Star's next two facilities are expected to be in jurisdictions that have higher tipping fees, which would, of course, mean higher revenues for North Star in places like Maryland, where they have a strategic partnership with their off-taker TAMCO, or in places like around the Greater Toronto area, where tipping fees are higher. They may only need to discount their tipping fees a lower amount than they do for their first facility here in Calgary. So again, that's additional upside. They're able to monetize carbon credits that they produce, which aren't factored into our base case returns. And they have the ability to expand production and almost double production per site by just adding a second shift. So we see there being significant upside to the royalty revenues that we get that could easily double revenue in terms of what our royalty payments are on an annual basis. But we're guiding towards that conservative $1.8 million per year.
Okay. Hey, very interesting, Akshay. Nice diversification that you came up with. This deal, what does that mean for future deals? Now that this seems to be more of the focus with the oil sands technology still out there and you're still trying to move that forward, but in terms of the deal front, acquiring other royalties, diversifying this royalty portfolio, what should we be watching out for?
Well, I think, Corey, you may know this, but I have a background in building royalty businesses. I was at the Ontario Teachers Pension Plan previously. I built a $3.5 billion oil and gas royalty company called Heritage Royalties, which has been a very successful platform for the fund. I then built a base metal royalty business called BaseCore, which we sold to Sandstorm Gold for about $600 million of value in the summer of 2022. One of our largest shareholders, in fact, now our second largest shareholder after our recent private placement to complete the North Star deal, is Pierre Lassonde, who is a very well-respected Canadian entrepreneur who built Franco-Nevada, the world's largest royalty business, which is today $36 billion. So we have quite a bit of background in the royalty space, and we see a huge opportunity here to apply that tried and tested model in the clean technology space, which today is already a $2.8 trillion market, which is larger than the entire mining market put together and growing quickly. So if we can find good technology innovators in the space who have de-risked their technology or at an advanced stage of execution, so it needs to be sort of piloted, ready technology, similar to our creating value from waste technology, we are interested in looking at them and seeing how we can partner with them to provide them capital to accelerate the growth of their business. Certainly, we've built a very strong pipeline here over the last year in terms of going out and speaking to other operators and entrepreneurs in the space. We've built a pipeline of over $300 million in deals, and we're feeling very confident that we should be able to announce and execute on 2 to 4 royalty deals per year and expect that we may be able to see one as soon as Q1 or Q2 of next year. So we're certainly very excited at this opportunity to grow out our business, look to be able to continue to create value for our shareholders while really accelerating a sector that is sorely needed by the world.
Okay, well, I'll be following up with you when we see another deal. It sounds like that is a major focus right now. What about an update on the oil sands progress, your technology there? You've had a few news releases that line First Nations groups you've been meeting with, government meetings and committees. What's happening in the oil sands?
So the oil sands business continues to be a big focus for us. Obviously, the value creation potential of a potential oil sands deal is massive for our shareholders. So any of this focus on royalty deals doesn't take away from our focus also on getting an oil sands deal completed. I'm very confident that once we have one of those across the finish line, that exposure to that royalty or that asset will be the best royalty within our portfolio. We continue to have those conversations with the operators. We've been engaged or had conversations with all of the operators that are involved in the oil sands mining space. But importantly, we're also continuing to build a strong relationship with stakeholders who are very focused on solutions in the oil sands space. What this means is we had a partnership that we announced in the summer where we had 4 Indigenous communities become our equity partners to be able to invest alongside us. We just announced the 5th community has joined that, which shows that we continue to get the ground level support to have one of this technology built at one of the oil sands sites. I was invited to speak at the Environment Committee and the Parliament by members of Parliament and discuss really the need for partnership between government, private industry, and innovators to be able to put in new technologies that help drive the change that we're looking to see. And I was recently in Azerbaijan as part of Alberta's official delegation for COP29. Again, talking about innovation and why it's important that we utilize new technologies to be able to improve the sustainability of industries, especially like the oil sands, which often get negative publicity abroad and even here at home in Canada. So all of this to say, we continue to make progress in that stakeholders are very supportive of what we're doing. We've had good engagement with the operators at various times, and we feel confident that things are moving in the right direction and are hopeful that we'll have an oil sands operator step up to the plate next year. And then we can share with our shareholders and your listeners that we're ready to go out and build our first facility.
So that's really the missing piece, right? Is having the oil sands operators put this technology to work. Do they need to do any more testing on it? What is kind of the key hurdle right now that has CVW with this technology, but not particularly active on any oil field production right now?
In terms of from a testing or technical perspective, there's nothing left to do. And this isn't just me saying this. As far back as 2015, there was an alliance called the Canadian Oil Sands Innovation Alliance, which was all the oil sands operators collectively working on innovation. COSIA had labeled us a ready to deploy technology. Since then, we did a pre-feed study with SNC-Lavalin. We did a feed study with Canadian Natural as well as Stantec, and then an optimization and feed study with Canadian Natural. All of that has taken us to a ready to deploy status. There is no more technical work that needs to be done to prove this technology. It has been clearly certified, and then the next thing to do is to go build a commercial facility. That's where it really comes down to the oil sands operators and their own internal decision making and capital allocation frameworks. They've obviously been very focused on reducing their operating costs, maintaining or increasing efficiency at their assets. And a big priority for them has been returning cash to shareholders, especially as they went through a period of lean returns, both before the pandemic and during the pandemic. So for us, it's about continuing to have the conversation with them and showing them how our technology can deliver strong shareholder returns and really add to the story where, one, it increases their sustainability for their assets, but importantly, does it in a way that increases the cash flow generation of those assets and the ability of those assets to generate returns for their shareholders. So it's really about making sure that the oil sands operators understand that this isn't just a cost. It's certainly not a cost. It's something that delivers value for them and their shareholders. And this is something that should be prioritized from a capital investment perspective.
All right. Akshay Dubey, CEO of CVW Cleantech. I'll post a link to the company's website in the show notes. Feel free to click that link, learn more about the company's technology as well as the recent investment in North Star Clean Technologies. Akshay, thank you very much for the update. Please follow up with me when we get some more of this significant news, any transactions coming out of the company.
Definitely will do. And thanks again for having me on.